Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Yang Jun-sok, professor of economics at the Catholic University of Korea. Dr. Yang, thank you as always for coming on.
Happy to be here.
So President Trump saying he has no time limit on making a deal with China, saying it could even happen after the presidential election next November. Global stocks down sharply this week, in part because of that. What are investors concerned about, and what's your outlook?
Okay, well, it's not just U.S.-China. During this whole week, President Trump has been on sort of the offensive for protectionist policies. Not only did he say that the negotiations between U.S. and China may be delayed, but he also proposed tariffs on $2.4 billion worth of French goods, and tariff rate there will be up to 100%. This will be response to French digital tax of 3% on profits made by Facebook, Google, Twitter, and Apple in France. And France, in turn, vowed retaliation with the European Union if President Trump does impose those tariffs. And then President Trump also imposed tariffs on steel and aluminum from Brazil and Argentina. Now, those countries had agreed to a voluntary export restraint on steel and aluminum along with Korea, but President Trump has taken away that option and now will put tariffs on steel and aluminum from those two countries. And the worrying part of this is that his excuse is that there has been a 10% depreciation of Brazil and Argentinian currency, but these two countries were not in the Treasury's currency manipulation report in May, so it seems like he's just made up a reason to put tariffs on these two countries. And then further, Commerce Secretary Wilbur Ross announced that auto tariffs on European and Asian cars are still in play. They're not ruling it out. And tariffs on remaining Chinese goods that are not under additional tariffs right now, they're scheduled to go into effect on December 15th. So it's been a really bad week for free trade, at least where it concerns the United States, and that has affected not only the U.S. Markets. Dow dropped by 1.1% yesterday. S&P dropped by 0.7% yesterday. Nasdaq dropped by 0.6% yesterday. European markets have been down. Asian markets have been down. So it's affecting the global economy. It's hitting hard, especially in the manufacturing sector, because manufacturing sector in the United States is tied into global supply chains, which includes China. And it also hit technology stocks, again, because technology companies have parts coming in from China. And then there's concern because if President Trump does go on with the new tariffs on December 15th, those will be hitting mostly consumer goods. So the U.S. consumers, who are actually pretty much the only hope left for global growth, will be hit with higher prices.
A lot of issues at play, like the U.S. manufacturing that came in weaker than expected as well. But another issue, according to the Bank of Korea, Korea's foreign currency reserves rose to a new high in November, up by more than $1.1 billion to about $407 billion. What's the significance of a rise like this?
Okay, well, the rise in the foreign currency reserves came from the large current account surplus that Korea has currently, and Korea keeps its foreign currency reserves not in cash necessarily, but in terms of treasury bonds and other securities and gold. So those earn interest, and the value of those change depending on the state of the economy. And Bank of Korea and the Korean government has been lucky. The value of the bond as well as gold has gone up. So both of those factors have increased Korea's foreign currency reserves. But it's not all entirely good news. One of the reasons why Korea has a current account surplus is that we are in a recessionary economy, and exports and imports both fell, which is not good news. It's just that exports fell less than imports, so Korea has been recording a very high current account surplus. But again, that does not necessarily signal good news. And also, having a large foreign currency reserve is not always good because, well, it's money in the vault that the government can use to provide welfare or make infrastructure investment, but it has to keep in reserve because of possibility of rapid capital outflow, possibility of currency crisis. And having too much of a reserve makes countries like United States and organizations like IMF worry that perhaps Korea has such high returns, buying so much dollars to put in the reserves, not because Korea needs it to as an insurance against currency crisis, but rather to keep the value of the won down. So that's one of the reasons why a lot of countries are suspicious that Korea is manipulating the currency.
Right, very interesting. Well, another thing we've got here on the headlines today is China's Foreign Minister Wang Yi is in Seoul for the first time since the row with Beijing over the THAAD anti-missile system. Briefly, what might this mean in terms of the Korean economy?
Okay, when I talk with China experts on China-Korea relationship, they keep mentioning that China's anger over Korea on the THAAD installation is not finished. It's just sort of a ceasefire rather than solving the problem. So we're hoping that when Wang Yi visits, there will be signals that China is ready to forge normal relationship with Korea, try to get over the THAAD retaliation. One way that may happen is having Xi Jinping visit Korea next year. So we'll also have to see the signals where whether Xi Jinping is willing to visit Korea next year and perhaps warm up the Korea-China relationship.
Got it. All right, Professor Young, we'll have to leave it there for now. Thanks so much for coming on and sharing your insights.
Thank you.